Hello students, I hope you all are doing good and keeping healthy. Well, today in your accountancy, we will be starting with the journal entry. And I know you all are very excited because finally we're going to start with the numericals in accounting. But students, like I had told you in the earlier videos that I had sent you for your accountancy class, that we have to follow certain rules of journalizing. Simply we cannot debit or credit any account. We have to do it according to the rules to which account it belongs to. Now we know that whenever the transaction happens, there are two accounts that are being affected, and the bookkeeper has to quickly record it in the journal before the posting is done in the ledger. So journal is the book of original entry, where right after the transactions the record is been kept, and from there it becomes easier for the accountant to post it into the ledger. But here the rules have to be followed while doing the journal entry. Now there are two approach or two methods, but whichever method you find it easier, you can follow that method for each question. There is no hard and fast rule that you have to follow only one particular method. Whichever comes easy to your mind, you can follow it. But at the end of the video, I will tell you which one can be more easier for you all to remember. Well, without wasting time, let us start with learning the rules of journalizing, and then we will do one numericals or practical problems from your book. So the rules of journalizing. The first one here is your traditional approach, British approach or English approach. So the first type of method or approach, we call it traditional British or English approach. In this we divide the accounts, or we classify the accounts in three classifications: personal, real and nominal. Now you just have to understand that whichever account is affecting in the question belongs to which account, and then when you are able to say that which account it belongs to, it becomes very easy to follow that rule and debit and credit or credit that particular account. Okay, now as I am going through these rules, and after you all go through this rule through the whole video, and if you have any doubt, you just should message me or ask me anytime you have any doubt, because without finding out or without approaching me, it will be very difficult for you and me to communicate with each other, because we are not in the face-to-face classroom right now. And so all you need is to communicate with me and ask whenever you don't understand. If you want to do good in your exam and you want to do good in class 11th, and I'm always there to help you all, just you need to communicate with the questions and be ever ready to ask me any doubt that you have. Okay, so let us start. The first one is been classified as personal account. So let me highlight this. Okay, so personal account. Now what is personal account? The name, either it can be a name of a living thing like Sohan, Rohan, Geeta, Sita, or it can be a name of an artificial person which represents, like name of a company, name of institution, name of bank, name of school. Even the bank account is personal account. Okay, so let us see what does the rule say. the rule says debit the receiver. Okay, so here the rule is saying that we have to debit the receiver, and what we have to do, we have to credit the giver. Okay, so we have to debit the receiver and we have to credit the giver. Okay, so here it is, debit the receiver and credit the giver. Okay, so with different colors I have highlighted this. Okay, so what is personal account? How will you locate the personal account in your question? Names, either it is a living person name or artificial name, or it is a name of an institution or name of a company or name of a school or name of the traders, or anything that we can say it is a name of something. Okay, so it can be natural, it can be representative, or it can be artificial. Okay. Now representative names means, like suppose there are out of 100 workers there are, let us say, 20 workers whose salaries are still not paid, whose some part of the salaries are due. So instead of writing individual, what you make, you write one account called as outstanding salary account. Suppose you have paid premium in advance, insurance in advance for some of the insurance, so you write down prepaid. Okay, so here I will tell you later on something which is relating to this, because when I come to the end of this video you might get confused with this outstanding salary and salary, prepaid insurance and insurance, accrued interest and interest. Okay, so I'll not confuse you, so we'll just go step by step. So personal account is the name of any person. Okay, either it is natural, artificial, or representing a account of several persons together, like outstanding, prepaid. Okay, now let us look into the example to understand it more better. Here the first question says paid cash to Sohan rupees 5,000. So here there are two accounts being affected, but since we are learning about the personal account and we are following the rule debit the receiver and credit the giver, what we will do, we will focus only on the personal account. So here two accounts are affected, paid cash to Sohan. One account affected is cash. From your business, from your office, what is going out? It is cash which is going out. Okay, and the other thing that is affected is who is getting the cash? It is Sohan who is getting the cash. So here the question is paid cash to Sohan. So you took out cash from your business, 5,000 rupees, and you gave it to Sohan. So here according to the rule, what we have to do to Sohan? Now Sohan becomes the receiver. You are paying cash, you are giving. Okay, so here you don't have to write your name, like you are giving, because you cannot write your name when you are making the account of your own business. Nowhere it can be your name. Remember, always remember this. Okay, so here the two accounts that are affected are, one is cash that you're taking from your business and other is Sohan. So what Sohan becomes here? Sohan becomes the receiver. So in your journal entry, what we have done, we have debited Sohan with 5,000 rupees because Sohan is the receiver. Now always remember student, in front of the personal account, we never write the abbreviation account. Either it is Sohan, Rohan, or any school name or any institution name or any trader name, we will never write the abbreviation account. Okay, now then what we have credited, we have written to cash. To cash comes in the credit. Okay, so Sohan debit, because Sohan is a receiver, to cash. Okay, now when we will come to the second rule, we will understand then why we are writing to cash. Okay, because cash is going out. Okay, so simply now you understand that just you focus on one. We are debiting Sohan because Sohan is a receiver. So alternatively, what will happen? Cash will be to cash account because Sohan is debited. Okay, now let us come to the second question. Received cash from Sohan rupees 3,000. Okay, now here what are the two accounts that are being affected? The two accounts that are being affected, again it is cash. Okay, you're getting cash from Sohan, so Sohan is giving you some cash. Okay, you maybe you sold some goods to Sohan. You sometimes purchase, sometimes sell some goods. So what is Sohan becoming now? Sohan becomes the giver. And so according to the personal account rule, why we are following this? Because Sohan is belonging to the personal account and we are receiving now cash from Sohan. So Sohan now becomes the giver and so we have to credit the giver. So we are writing here to Sohan 3,000. So alternatively what will happen to the cash? Cash will be debited. So again when we will come to the real account, we will understand why we are debiting cash, because cash comes in. Okay, what comes in we have to debit. So in this question, once again, personal account, name of natural, artificial, representative person, rule, debit the receiver. In the first question we are debiting Sohan because Sohan is the receiver. We paid cash to Sohan. There are always two accounts that are being affected. So in this question we have cash and Sohan. Sohan is a personal account. So according to the rule, debit the receiver, we are debiting. Second question, received cash from Sohan. Now Sohan becomes the giver. According to the rule of the personal account, we are writing to Sohan. We are crediting the giver because Sohan now becomes the giver and he is giving us 3,000 rupees. Okay, now let us come to the second classification of accounts. The second classification of accounts here we have is real accounts. Okay, now what is real account? Real account is something which can be measured in terms of money. Okay, and which is your own possession, your property for running the business. So something which can be measured in terms of money. Now real account is not only something that you can see or touch. It is not only machinery, it is not only building, it is not only your office furniture, it is not only your factory. Okay, it can be even intangible real account. Intangible real accounts are something which you cannot see, but it can be measured in terms of money and you can earn good amount of money out of it, like patent, copyright, brand, goodwill. Okay, so all these are the intangible real accounts. So what is real account? Real account is something which can be measured in terms of money and which are the properties of the business. Okay, so here what does the rule say? Debit what comes in. Okay, so here the rule says debit what comes in. Okay, and credit what goes out. Okay, so what is a real account? Anything which can be measured in terms of money and which is the property of the business. It can be tangible, that you can touch and see, or it can be intangible, which you cannot touch and see, but it helps you to earn money, and you can, or it can be measured in terms of money. Like you took a patent which you cannot see, a right for a right for some invented good, and then you give the right to some company, that company can use that method or that way of doing the business. So something that you are selling which is not visible, but you can earn money out of it. Okay, so you have patents, copyright, and goodwill. Okay, so you have a title for a authority or a license that cannot be seen but you can sell. Tangible, which you can see, cash, building, factory. Okay, so let us come to the question without wasting time. A machinery is purchased for cash rupees 30,000. So here once again we have got two accounts that are being affected. The first one is machinery, because we are finally getting a machine, and to get that machine we have to pay cash. So the two accounts affected here is machinery and cash. Now let us locate what these two can be. Machinery is a real account. Why we say machinery a real account? Because it is something which can be measured in terms of money and is the property of the business. Okay, and it is tangible. So tangible asset. Okay, cash. Cash is also real account because we can touch, see, and it itself is something which can be measured in terms of money because it itself is money. Okay, so what does the rule say? Debit what comes in. Now students, when we are purchasing machinery, machinery is coming in our business. Okay, so we are debiting the machinery account. Why? Because machinery is a real account. It is an asset which can be measured in terms of money and it is the property of business. And since we are purchasing, it is coming in, we are debiting. And so to buy that machinery, we are paying 30,000 rupees cash. So this 30,000 rupees cash that we are paying goes out. So credit what goes out. Isn't it very simple? Real account, rule, debit what comes in, credit what goes out. Question says machinery is purchased for cash. Two account affected here is, one is machinery that comes in, we are debiting. Second is cash, what goes out, we are crediting to cash. Okay, now since both the rules is been followed in one question, I have not typed the other question, but when we will go further to the practical problems, we will understand more better. Okay, so what does the rule of the real account say? Debit what comes in, machinery comes in, debit. Credit what goes out, you're giving cash, cash goes out, credit. So this is what I was saying in your personal account, why we are sometimes debiting cash and sometimes crediting cash, because when cash goes out, or when in the real account, when what goes out we credit, what comes in we debit. Okay, now the next one here, the third and the last classification according to this traditional British and English approach here is your nominal accounts. Okay, so what is nominal accounts? Nominal accounts include all the expenses and incomes. Okay, so here what is the rule that we have to follow in your nominal account is we have to debit all the expenses and we have to credit all the incomes and gains. Okay, so the nominal account includes all the expenses and all the incomes and the gains. Okay, let us highlight this. Debit all the expenses and losses. Okay, and credit all the incomes and gains. So what is nominal account? It includes all the expenses, losses, incomes and gains. The rule says debit all the expenses and losses, credit all the incomes and gains. Okay, now let us look into the example. Here the first example says paid salary. Now you will be confused. There is only one account which I can see in the question, right? Paid salary rupees 8,000. Then how will I tell which other account is being affected? Okay, so salary, whenever there is no word as check, only paid salary rupees 8,000, we will quickly assume that this salary is being paid in terms of cash. Okay, so whenever there is any expense, rent, salary, or interest paid, or commission paid, or any expense, but there is no word called as cash around in the question, we will quickly assume that this is being paid in terms of cash. But if there is something which is written like there is something which is written like paid in check, so in place of that we will write bank. Okay, so when we will go further to the questions, then we will learn more better. Just you understand the rule here. So here salary is the account which has been affected, and since salary is your expense and it belongs to the nominal account, what we have to do? Debit the expense, and so we are debiting salary, and salary is of course paid in terms of cash. So what is going out of your business? Out of your business is going out your cash that we are crediting. Okay, so here according to this rule, what we are doing? We are debiting the salary because salary is your expense, and automatically salary is paid in form of cash. because there is no word check written here. So we will write to cash because cash is going out. Second, received commission 4,000. Now here commission we are receiving. So commission becomes our income or gain. So when commission we are receiving according to the nominal account, we have to credit the commission because commission is becoming our income or gain, because right now we are receiving the commission. And what is coming in? Cash. We are receiving in form of cash. So when there is no word written as anything, we will assume that we are receiving this particular income in terms of cash. So students, if like this question is written, paid salary, received commission, paid rent, received bonus, and there is no word cash, automatically you assume that the other account affected is cash. But if there is a word written called as check, then in place of cash we will write down bank. Okay, so this is what the traditional British or English approach of journalizing. Just we have got 3 classification of accounts and we have to follow the rules, and it is not important that all the particular accounts will come from only one group. Like here you can see salary is coming from nominal, cash is coming from real. Here again cash is coming from real, commission is coming from nominal. Salary, nominal, expense, debit. Cash, real, goes out, credit. Cash, real, comes in, debit. Commission, nominal, it is income, credit. So it is not important, or it will not be that in one sentence or in one transaction both the affected accounts will belong to the same account. It can belong to personal, one can belong to personal and other nominal, one can belong to real, other personal, one can belong to nominal, other real, and so after locating what account it belongs to, you can follow the rule and you can debit or credit the particular account. Okay, so I was telling you that I will tell you about, I told you in personal account there is a representative personal account like outstanding salary. Okay, like we have prepaid insurance. Okay, so here whenever it is salary outstanding or outstanding salary which is representing a particular personal account, it will become personal account. Then we have to follow the rules of personal account. But if there is no outstanding, there is no prepaid, only salary, then we will follow the nominal account. Okay, once again, when there is any representative personal account and there is a word attached with the salary, outstanding, prepaid, or if there is any word attached with the insurance, or if there is any word attached as prepaid with the insurance, prepaid insurance, personal, only insurance, nominal, outstanding salary, personal, only salary, nominal. Okay, so if you're getting confused, you repeatedly see this, whatever I'm saying. Whenever there is any word attached with salary outstanding, it becomes representative personal account. Only salary, no outstanding word. it becomes nominal. Only insurance, it becomes nominal. Prepaid word attached or anything attached with it, it becomes personal. Okay, so here, before we go to the second approach, let us quickly revise this. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal, debit all expenses, credit all incomes and gains. So here we have gone through the first approach. Now before going to the second approach, let me tell you something interesting. Now here we have got the word credit, which we are abbreviating with the word DR, and the credit we abbreviate with the word CR. Now you must be thinking that debit, why we are writing DR? Because it is coming from the Latin translation and the word is debere. Debere, which means to owe, and credit comes from the Latin word credere, which means to entrust or give, to give responsibility to someone. Okay, so debit and credit, so we write DR in the abbreviation of debit because it comes from the Latin word debere, which means to it means to owe, and credere, it means to entrust. Okay, now let us go to the second. Here the second approach is American modern or accounting equation approach. Okay, so let us highlight this. The previous one was British, this is American. The previous one was traditional, this is modern. Okay, so here there are 5 accounts that we have classified. The first one is asset account. Okay, what are assets? Assets are something that you own in your property and which helps you to earn money in future. Okay, so the rule here, it says debit an increase in asset, credit the decrease in asset. Okay, I have not written any question here. So whenever your asset is increasing, like when your machine, you're buying new machine, you're buying new furniture, whenever your asset is increasing, you debit it. And whenever your asset is decreasing, like you're selling it, your cash is going out, any asset which is decreasing, you credit. Okay, like machinery purchased for cash, so machinery is increasing, debit, cash is decreasing, credit. Okay, second one we have is liability accounts. Okay, so in the liability accounts, rule becomes opposite. In asset, when we are debiting the increase, in liability we are debiting the decrease. And when in asset we are crediting the decrease, here we are crediting the increase. Now what is liability? Liability is something that you have to owe to others, you have to give to others, like you have taken loan from the bank, you have taken goods on credit from the supplier, and you have taken bank overdraft, so there are some bills payable. So all these liabilities are something that you owe to others, you have to give to others. So when your liability decreases, you debit. Okay, and when your liability increases, what you do? You credit that particular account. So here the second account that we have classified is what? Liabilities account. And so here what does the rule say? The rules say that debit the decrease in liability and credit the increase in liability. For example, if you borrow from your firm or business, your business or firm borrows rupees 1 lakh from, let us say, Rohan. Okay, so Rohan's account will be credited. Why we will credit Rohan account? Because your liability is increasing. You are borrowing money from Rohan for your business. Okay, so now you have to pay to Rohan in future. So your liability is increasing because you have to give it to Rohan. In future, you are owing 1 lakh rupee to Rohan. Okay, now when you pay back that money, what will happen? Your liabilities are decreasing. So now Rohan will be debited because your liabilities are decreasing. Okay, then second one we have is capital account. Okay, in the capital account, debit the decrease in capital, increase in capital credit. Okay, so liability plus capital is one side of the balance sheet. So we will follow the same rule for liability and capital, and even for the income will follow the same rule. Okay, so debit decrease in capital. Now whenever the capital will increase, now what is capital? Capital is the invested amount that you invest in your business to start your business, or when you reinvest in your business, you whatever money you put in the business, that is called as capital. So when capital is increasing, like when you're introducing some new or additional capital, we will credit. So capital will become as to capital account. Okay, but if the businessman withdraws for his personal use some of the capital will be debited. Okay, so don't get confused with it. Just you understand that whenever we introduce capital, capital is been credited. Okay, next we have revenue or income. So revenue or income, whenever it increases, it is credited, and whenever your revenue decreases, it is debited. Okay, so whenever your income increases, it will be debited, like your commission, bonus, it will be credited. And so whenever your revenue increases, credited. Okay, then next we have losses or expenses. Okay, so debit the increase in expense. Salary you have to pay, rent you have to pay, so you have to debit when your expense is increasing and credit when your expenses are decreasing. Okay, so here which rules are similar? The rules that are similar are your asset and loss or expense, and liability, capital and revenue. So once you remember the rule of asset, same rule for loss: debit increase, credit decrease, credit decrease. For liability, capital and revenue, once you learn the rule of liabilities, same for capital and revenue: debit decrease, and for this also debit decrease. Credit increase, this also credit increase, and this also credit increase. Okay, so students, today we have learned the two approach of doing the journalizing. We have learned traditional British or English and American modern or accounting equation approach. Now if you ask me which rule to follow and remember is much easier, I will tell that it is the traditional rule, which is much easier to remember. Okay, but there are some questions which confuses you, like liability or capital. In that terms you can follow this American or modern approach. Students, I want you all to go through this video again and again very carefully and understand each rule and you have to remember this rule by heart. And once you remember it by heart, the journalizing rule never changes till you are going with your studies, either it is class 11, 12, your college, or you're working or anywhere. This is what the rule that you have to follow, and this will always take you through any difficulty while doing the journal entries. Okay, I hope you understood. And if again I'm saying, if you're not able to understand, you need to communicate with me, because we are not now into face to face connection, or we are not communicating with each other face to face. So it is you who have to communicate with me to understand any question that you are not understanding, because accountancy is something that when you ask, then only you will be able to understand, and I'm free anytime. Okay, so we'll do the question answer very soon. Thank you.